All right. Hey, guys, another fantastic day of trading inside of the Professor Trades Club. We were trading silver, crude oil, NASDAQ, Russell, gold. A lot of guys are catching a lot of pips today in the club. At the moment, I'm taking a look at silver. I think because of the move down that we had this afternoon, it looks corrective to me. So that is a clue of sorts. One of the valuable insights that Elliott Wave provides once you understand certain things is the wave structure has character that is specific to each wave type. The two main types of waves are impulse waves and corrective waves. The impulse wave typically plays out in 5 waves without overlap. Corrective waves typically play out in 3-wave moves and involve a lot of overlap. So knowing that simple fact can really help you gather some clues that'll point to what might happen next based on the character of what you're seeing. All right, let's dive into the chart. All right, so at the moment, I'm looking at a 5-minute chart. We're scalpers, day traders in the Professor Trades Club. So I focus a lot on the lower time frames. However, I must say, as an Elliott Wave practitioner, just like with any other methodology, actually, I always look at the larger degree first and then drill on down. But I don't want these videos to be overwhelming and too long. So today's video on silver, I'm just going to get right to it. We had this C wave down yesterday, which we caught most of, and then we got the bounce. It went higher than I initially was expecting. I was expecting it to terminate up here as an A wave, even possibly here, but it didn't. It kept going. And then it did finally come down. Now, we caught the long, and we also caught 2 different shorts from this morning, and then again a little bit later in the morning, and we rode that thing down. It was glorious. And then we stopped trading because we don't want to give the market any rebates. No rebates for Mr. Market. Actually, this is important. One of the things Armando teaches is a method that will help you kill your greed. If you're the kind of person that the trade goes in your favor and you have a hard time taking the gains, and then that trade, you either give back the gains or worse, it even turns into a loser, then you would benefit greatly from being in the club, the Professor Trades. We deal with psychology a lot. Armando happens to be a fantastic teacher, leads by example. You will learn a lot about your own psychology in the club. So we don't give the market rebates. If you make 20, 30 pips, pay yourself immediately. And then perhaps let the runner run, but pay yourself first. Okay, so let's go back to the chart. So after this move down, this move up extended beyond what I was originally expecting. And I could see this as an impulse. Okay, so let's just leave that alone for right now. I could see this as an impulse. I'm going to come back to this wave. Really what I want to point out is the overlapping corrective nature of this move down. What I mean by overlapping, first of all, this is clearly 3 waves, right? You can see that. Hopefully my screen, if you're on a laptop or a desktop, I highly recommend that you go full screen. If you're on a phone, I'm trying to make this big so you can see the levels. This is clearly 3 down and a bounce that did not make a new high. And then I view this as another 3 down, 3 up, 3 down. Whenever you see me in the club typing, this is moving in 3s, that's what I'm referring to, is price is overlapping itself. What I mean by that is this low got overlapped by this low right here. This high got overlapped by this high. This low got overlapped by this move down. This low got overlapped by the next low. And then finally it has something looks impulsive without measuring it. This looks impulsive. So the way I would describe this at a glance, using the concept of Elliott waves have character that is consistent and indicative of what type of wave it is. So to me, this looks like an impulse. This looks corrective. This looks like an impulse. So that has me thinking the odds have shifted a bit. Over here, I was looking for this to have been an A, B, C, going much lower. But now I'm rethinking things because of the nature of these waves and the way this looks. So first thing I'm going to show you is how I measure to decide if it's impulsive or not. So you grab the trend-based fib extension. I'm in TradingView. You're going to click on the bottom. You're going to click on a swing high, and you're going to click on the next swing low. And feel free to copy these fib levels. These are just some basic fib levels. More about this in educational videos to come, but in the spirit of time, I'm going to keep it moving. So it's possible this is a 1, 2, 3, 4, 5. It's possible. Now let's talk about overlap briefly. So here is a swing high that was not overlapped by this swing low, nor was it overlapped by this swing low. And here's a swing high, a swing high, a swing high, a swing high, another swing low. So what I mean by no overlap is price, once it got over this initial, what I'm calling a 1, 2, 3, 1, 2, then there's another wave inside of here, but we're looking at this as a 1, 2, 3, 4, 5. And this box, which if you're in the Professor Trades Club, you see this box on a lot of my charts. And what it is it's a ratio that if price moves in a 5-wave structure, it is fairly likely, meaning more than 50% of the time, it's going to terminate in a box like this. So I don't want to put the labels on here because I'm not totally committed to this being 5 up, but I would say that this looks more impulsive than it does corrective because it is not moving clearly in 3 waves. It, to me, looks more indicative of a 5-wave move. Now, one way we can measure wave 4 is grab this tool, which is simply the fib retracement tool, not the fib extension tool. This is simply a retracement tool. And the way you measure for a wave 4 is you only get 2 clicks in a fib retracement tool. You get 3 clicks in a fib projection tool. So here we are in the fib retracement tool. 1 click goes at the bottom of what you think might be a wave 2. The next click goes at the top of what you might consider to be a wave 3. And then the fibs that you are looking for to start are the 236 and the 382, which I have saved as a template because I'm doing this all day long in Professor Trades Club. I'd like to drag this over because I'm really only looking for what happened after the top of wave 3, which is here. Here. So it's this low that I'm really measuring. It's the low that happens after what I think may be wave 3 that I'm measuring for. The standard retrace is 236 to 382. If it extends a bit to the 50, fine, to between the 382 and the 50%, as long as it does not overlap with the top of what you are calling wave 1, which is this red line. So this meets that standard. It comes down between the 382 and the 50% and does not encroach upon the level of wave 1. That is an immutable rule of Elliott Wave. Elliott Wave only has a handful of rules. It has a lot of guidelines. Anyway, so 1, 2, 3, 4, 5 in the ratio box. Possible 5 up. This structure is moving in 3s And if you just want to see a little detail, typically wave threes give you an ABC, and usually there's some degree of symmetry. What I mean by that, now I'm using the fib extension tool. What I mean by that, when I'm measuring an ABC, I put the first click at the top, swing high. Next click, bottom of swing low, and then go back to the next swing high. I have a template called A equals C, which just means A is this wave, C is this wave, and very often an ABC will terminate at the 100 fib. Now you can just see using your eyes that this has come down beyond that, but two other measurements that are very common for a C wave is the 1236 and the 1382. You will notice a lot of repetition with these fib levels. That is the nature of the universe. What? Yeah, the nature of the universe. Now that's a different video, isn't it? So I'm going to move these labels over to the left just so we can see a little better. And what I like to do is drag these over because I'm really only looking at this bottom right here. I want to see where this wave ended. All right, so as an ABC wave, it looks like it tagged the 1236. So I try to keep my chart really clean. So ABC. Now the next move, ABC, and look at this much larger move. I'm only going to measure this one more just to so you understand. Same exact fib tool. Click the swing high, click the swing low, click the next swing high, 31,285. I got to turn off the magnet so I can drag it over. I'm also going to put the labels back on the right side. And I'm going to drag 31,285 because I'm only interested in seeing the low here to see where the price hit in relation to those fibs. Isn't this interesting? You've heard me say fractal means self-similar at scale. This is a three-wave move that struck the 1236. This is a three-wave move that struck the 1236. So this is an ABC. This one is an ABC, and the two are connected by another wave, which seems to be less clear as to what it is, but I'm going to go with that also being a three-wave move, ABC. So it's a bunch of three-wave moves, which gives me a clue that it is corrective rather than impulsive. So now we are in the doldrums that I see all the time after the 5 p.m. close, all the way up until roughly 8 p.m. would be the first sizable movement that you would see, unless, of course, there's some news item or geopolitical catalyst. I acknowledge catalyst. I ignore news and fundamentals. I trade fibs only. But I don't live in a cave, so I'm aware that there can be geopolitical and news events that affect price as catalyst. That's another video. Okay, so if this is corrective, which I believe it is, I just showed you how it's moving in threes. There's nothing impulsive here. To me, that suggests, listen, this is important. Sometimes when I talk about Elliott Wave, it may sound like I'm talking in certitudes. It might sound like I'm talking as if things are going to happen. But I must tell you, that is not the case. Elliott Wave is providing parameters, and there are times where those parameters shine. But I've learned through pain not to think that Elliott Wave is providing like a treasure map, because I put numbers and so forth on a chart suggesting something is going to happen. Just all that is the highest probability that I can see out of a field of probabilities for what might happen. And so, but the parameters that Elliott Wave provides is really where the strength of the method is. It takes a long time, though, to do it properly, so you can get parameters that are helpful. Because if you don't know what you're doing, you can really screw yourself up. Ask me how I know. So I just want to say that it's extremely important. Elliott Wave is not a treasure map. It is a methodology that provides market context and, in particular, parameters, so you can know where you are wrong. Speaking of being wrong, I thought this was an A, B, and we were going to get a C wave down much lower. Now, what's interesting is I traded it as such successfully, even though I believe I was wrong now. And I still might be. I don't care if I'm wrong or right. I care about the parameters, and I care about trading and risk management. So it may sound like I have strong opinions about what is happening, but trust me, they are loosely held. I could post something and say I'm short, and an hour later I might see something different, book gains and flip long. Now, typically I don't do that, but I'm saying I could do that because as price information comes in, we get more information. We can see different parameters, and we know where we're wrong and where we're right, not from an egocentric place, but from a risk management place. Very important distinction. I know a lot of guys like to post stuff because they want to be right and they want to show, something about look at me kind of a thing. Whereas Elliott Wave is more like look at the fibs. Once you know how to put the fibs there, I'm not doing anything magic here. I'm just putting the fibs where I think they go. Now that is very subjective. That's another video. So anyway, back to what I was saying about being wrong. I thought this was an AB with a C wave to come, but now I'm thinking something different. I'm thinking because this looked impulsive, I think this could be an A wave. This looked more corrective. This could be a B wave, and then a C wave would happen. Now, let's measure just to get a rough idea. Then we're going to do one last thing, and I'm going to call it quits. But I wanted to get this out to you before the European session because this may provide some actionable levels if you're trading the Europe session. So again, I've got the fib extension tool. I've already clicked once. Now I've clicked twice. I'm going to click find this low, 37.85. I'm going to make this blue so we do avoid confusion. And now what I'm thinking is if this wants to continue in an impulsive manner, it's much more likely that we're going to end up somewhere out of this box. If you imagine, actually I had a box on here earlier today. I like to draw a box around the overall range and then identify the 50% level of the box. And what you will find is that price interacts with the 50% level quite often, and it gives you a frame of reference. Above the 50% level of the box, the bias is to the upside. Below the 50% level of the box, the bias is to the downside. If it's crisscrossing that level, step aside, wait for it to resolve itself. All right, so let me make this should be a bigger, higher degree. Yeah, something like that. So if this is going to go higher, there's going to be 5 up and 3 back. Now I can see from looking at this reaction, it looks impulsive, but at this scale, sometimes it's hard to see what's going on. So this kind of looks like a 1, 2, 3, this, I don't think this is 5 up yet. But if this comes up and gets above this zone right here, and this is the 618 of the entire move down, it's already visited the top. Look what it hit, the 886. Magic fibs, man. Now this isn't an Elliott Wave. This is just price came down from that high over here, struck the low, and this high to this low. Price came up to the 886 to the penny and got rejected. Then it tried to come up again and got between the 886 and the 100 fib of this move and got rejected. This is where I shorted it from my last short. And these kind of fibs are extremely helpful to pay attention to. So now my $1 million question is this impulsive or not? And now I need more information, but the reaction off this level looks impulsive. Now I could get into measuring this stuff at this nano scale. This is now a 3-minute chart. What I would rather do is wait. See if this price can come up again, either get up into here, which could be 5 up. If it makes it up into, say, 31.23, could be a nano 5 up. And for the moment, this low right here could be a clue. If it keeps going higher and gets up into here, that could very well be 5 up. And this whole thing could be wave 4. Now, listen, I got to be honest, I discount the price action from anything after 4 p.m., really 3 p.m., 3:30 East New York time, 3:34, all the way up till about 8:30 before you see next movement. But this is what I want you guys to watch. 31 even for this low. Okay, let's talk floor ceiling. Keep it real simple. The floor 31 at the moment, the ceiling is 31.23. And these fibs right here represent the retrace of this move down. So right now we've hit the 618 and we are rejecting. At the moment, we are rejecting. But the nature of this move up, we don't have a lot of overlap of anything yet. If anything, 1, 2, 3, 4, 5. It's possible that this goes. Look, look at this scale. This is my disclaimer. At this scale, anything is possible. Okay, Elliott Wave shines on the 1 hour time frame and up. But as a scalper day trader, I am always looking at these lower time frame, lower degree levels. So one of the clues that I may be able to glean from this, yeah, I don't think that's 5 up, but it's not up to me. It's up to price. Price is king. It is possible if this holds, if this 31 holds and you move higher to get above this level, this zone, come up into back up into the 618 again, and then back test this level as support. I think it is indicative of a continuation higher. Just basic price action and the way these waves look. Not necessarily the way it measures, but I tell you what, if we're talking fibs, let's do this. I mean, we're always talking fibs. I'm going to put Armando's fibs on there. But actually, before I do that, I don't want to overwhelm you guys with too many fibs. So let me, yeah, you guys can handle it. Let me just leave all that on there. Let's use Armando's fibs. I'm talking about the Professor Trades. He has a very specific fib setup, which I like. And we're going to put that on here. And I've got it saved as a, oh, my bad, wrong tool. Armando's fib setup is just simply the fib retracement. You find a swing high, you find a swing low. And then if you're me, you go to your templates, and I've saved one called Armando. And it's these red fibs over here. And I look for confluence between my Elliott Wave work and his fibs. So the first thing, and then I'm gonna remove, and I'm just gonna leave you with some levels. I'm gonna remove all of this noise, and I'm just gonna leave you with some levels that are gonna provide clues for us going into the European session later tonight. At around 8:30 is when you could start seeing some movement. If this is bullish, it is going to very likely come up here, rattle around up here, and it's going to break through these levels. Maybe not tonight, but getting above the 31.23, this zone, getting above this zone is going to be key. And I think a home run is going to be if it can get above this zone and make it all the way to the golden ratio at the 1618. I'm not predicting anything. I'm giving you parameters. Okay, so those are the zones. And obviously this is a zone for sure all the way up here. Now this is the big red zone that I'm drawing this just up underneath is call it a supply demand zone that I dragged over from past price action. So these would be ideal levels to watch. Okay, if it's going to go up, these are the levels. And I think it's interesting that oval where I had the 1618, isn't it interesting that that level coincides with the top of this previous swing high that we have yet to break above. So really, that is more of a ultimate ceiling. Okay. Now, let me make this extra fat to indicate the importance of that level as a ceiling. And then for our purposes, I believe this is the floor. So I'm giving you 4 levels really: top, ceiling; bottom, floor; intermediate floor; intermediate ceiling, with these levels. And just to keep it very, very simple, I'm going to put some levels on there just so you can, if you look at the right of my chart, you can see these levels. So you can pause the video and get these levels. And price very, look, you can see my levels in the past. Price very often is bouncing around and interacting with these levels. Even in the past, look at this. I mean, that's why they're levels, because price attracts to those levels like a magnet. So look, I'm going to wrap it up now. If you're long, your stop one, the conservative stop is below 31 even. If you're going to be long, if you're going to be short, a stop would be 31.23. This level right here. My tendency would be to wait. Let the markets open. Let's see what happens at 8 o'clock, 8:30, 9 o'clock Eastern Standard Time. Look at 9:30. See what happens. What's going on with the price action? Does it look like it's going to go higher, or is it pulling back again? Because it can still retain its bullishness until it loses 37.85. Honestly, I know that's far away, but that's just the parameters that I'm seeing. And then of course, with each new high that it makes, you're getting another clue. So there's an intermediate high right here, 31.14, right? And then another intermediate high at 31.285. Now basic price action, right? So keep an eye on these levels, manage your risk, and wait. Get some more price action. I suggest getting some more price action. All right. So guys, if you're getting some value out of this video and you want to stay up to date on your silver charts, hit the subscribe button, because I'm going to be doing these charts fairly often, and that way you'll be updated. I'm also going to be putting out a little bit more educational content, because I think the more you learn, the more helpful these videos are going to be for you. So it's a lot to learn, but I'll be giving out little bits as I go in every video. I try to teach a little bit and also provide something actionable for you. So thanks for watching. Good luck. And if you're, oh, hey, Miles, if you're not in the room with the Professor Trades, I highly recommend it.
Hi, guys.
Miles says hi. All right. We will see you on the next one. Bye-bye.